Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over the stock market pullback that took place on the October 11th, 2018. It was a Thursday. 5 downs consecutive here in the S&P 500. We're going to go over the 4 main indexes, take a look at the emerging markets, the S&P 500 as a whole, the world market. Current futures are positive, so Friday, depending on earnings, those financials, there's going to be 5 financials reporting: JP Morgan, Wells Fargo, Citibank, I believe. We'll go over these here in just a minute. And I believe, depending on how these earnings, revenue is going to be playing a huge part as the dollar gets stronger, as the yields continue to rise, and it becomes more attractive to lock in your investments in a low risk investment, for the long term, over the next 10 years. It becomes much less of a risk. And also with rates going higher and tariffs, there's so many things out here in the market that are kind of affecting it here and there. So S&P 500 sold off another 2.06% today, down over 5% in 2 days. 5-day change down 5.97. Year-to-date up still 2.05. My portfolio, I'll tell you right now, my Roth IRA is completely gone in the negative right now, which is kind of funny over 2 days. Dow Jones here down an additional 2.13%, again over 5% here within just the last 2 days, down 5.91%. This one, I saw so many people on Facebook. If I head over to my Facebook and just take a look at some of the comments that I was getting from, some business group was doing like a live, watching the Dow Jones fall, broke 500, broke 520, 30. Oh, we're going to be hitting 600. It's a stock market crash. Nobody out there, you can really tell the mindset of these people. They don't own anything besides the 401k. They probably don't even know what fund they're investing in their 401k. They've never invested in an individual stock. And it's kind of, crazy to see these comments of people. But anyways, the Dow Jones, the main highlight of today, as it was bleeding off, it's only tracking 30 stocks, so it's really funny that people track this one over the S&P 500 or some of these other ones as a whole. So on to the NASDAQ. NASDAQ sold off 1.25%, not as much as the other ones. This is due to Wednesday already having taken a hit of 4.008%, down 5-day change. 6.99%, basically half of its gains for the year completely gone in just a matter of 2 days. Year to date, still positive, 6.17. The Russell 2000 lost an additional 1.91% today. It's beginning to bottom out. I think this is the bottoming out period. Going into earnings, we're going to be seeing financials, retail, then tech, and so on. So we're going to see a lot of earnings here, and that's going to be playing a huge part. So Russell down 1.29, down over the 5 days, 6.19. Year to date, still positive, up 0.64. Emerging markets took about a 1% loss today, down 0.99. This one's already been hammered year to date. You can see down nearly 17%. So pretty interesting there. I know a lot of people in the past were moving out of the U.S. and into some emerging market funds. You can see here, this is the S&P 500 as a whole. Today, during the day, Google, Microsoft, Facebook, Twitter, they were all in the positive. Towards the end of the day, they began to sell off a little bit. I know NVIDIA lost an additional 4%. Amazon here, you can see an additional 2%. A lot of these companies here just continue to trend up and down. I'd put a limit buy on Apple at $212.50, I believe, to buy some shares. It did not trigger. It almost fell to that point, to my buy point. It was somewhere within that range. It didn't quite hit there. It was almost there, and it missed it. And then it bounced back up to 217, so I was pretty unfortunate that I didn't get what I wanted. But hopefully tomorrow, Apple tanks a little bit, and I can pick up some more shares. So here's the world. This is the world view as a whole. You can see Canada, Mexico, Colombia, Brazil, United Kingdom, and so on. The only one that sort of was in the semi-green today was over in China. Alibaba popping back up 2.61. JD over there up 3.39%. Baidu up 1.93. So while most of the world was in the red today, China, which is already down over 50% just within the last few years, is sort of catching a break now. So I believe going into Friday, we're going to start to see some sort of recovery. Here you can see stock futures are currently positive. S&P 500 up 1.11%. The NASDAQ up 1.44%. The Dow Jones up 1.12%. Very positive right now. We're going to see how much of a gain we're going to be able to get over the last few days. This is just a bicyclist. My kid, he's 3. He's learning to ride his bike right now without those training wheels. He fell off his bike. He got back up, picked himself back up. That's what the market's doing right now. He fell over. He's getting stabilized. He's kind of stabilizing himself, and he's going to chug along a little bit further, and he may fall over in the next couple days or weeks, but he'll eventually, chug along. So that's what the markets do. They always recover over time. So most active here in the after hours. Look at this. Most active after hours. How much of this is green? All of it, it's green. Comcast, General Electric, Ford, Apple, Wells Fargo, AT&T, Microsoft, Micron, Cisco, and so on. Every single stock here within the list is positive. So Friday, do I believe we're going to be doing, starting off pretty strong in the morning? Yes, I believe Friday morning we're going to be starting off pretty strong. Oil, went down an additional 2.76% today. Basically, Wednesday and Thursday were mirrors, down 5% over just the last 2 days. Year to date, still up 24.48. Dollar catching a little bit stronger. This is what's sort of affecting, there's all sorts of things affecting us. The dollar's strengthening, rates are getting higher, money's more expensive to hold, debt's more expensive to hold, tariffs are kind of going on and hitting some of these, affecting some of these international stocks and national stocks. People are beginning to do layoffs, and so on. There's just a lot of little things here and there, like little pieces that are sort of dominoes, and with one kind of falls over, it kind of topples some other ones over, and someone's out there got to restand it up. Silver, well, it did sell off yesterday. It looked more attractive today. Went up 1.71%. Year to date, still down 14.51. If you're going to go out there and buy silver, instead of buying the trust, go out there and just buy physical silver. We have gold shares here. Gold continued to do positive on Wednesday and then caught a huge bid on Thursday, up 2.52%. Bonds, kind of interesting. A bit of a buyback throughout the day as people are trying to lock in this yield of around 3.2, 3.25 within that range. Bonds are currently down around 3.12. Actually, we can take a look here. 3.13 is where that 10-year is sitting. 30 years at a 3.31. So, this, yesterday was at 3.22, up at 3.27. That's why we had, there's little indicators here and there, but nobody knows exactly why, Trump is blaming the Fed, raising the rates so high. I think it's actually good to have these rates high. It's so inexpensive to go out there and get a loan and borrow money. People are going head over heels in just debt, going out there getting car loans. I work at a financial institution. I work at a credit union. Our most common loan is car loans. And our mortgages, they do what they do. People aren't refinancing anymore because they've already got a great 3-4% rate versus the 4.5% rate they're going to get. Investment rates are at nearly 5.315 to nearly 6% depending on your your credit score. So we're going to start payday loans. But Friday earnings, we have First Republic is going and reporting their earnings pre-market. They're expected to hit $1.21. We're going to see where this one hits. FRC is not one that I normally track myself. Citigroup is also doing before market opens at 169. JP Morgan, this is one I recently added to my portfolio. They're expected to release earnings before the market opens. They're expected around a 2.25. I believe they're going to beat it. Wells Fargo expecting $1.17, PNC expecting $2.72. So I believe tomorrow we're going to see some financials maybe not do so well. I don't see Wells Fargo maybe beating it. We'll see. JP Morgan, I think they're going to be doing well. So the financials will help the market on top of the already kind of bottomed out. We've sunk, and now we're going to be kind of bottoming out. Investors are going to be looking for deals. Financials may be able to catch something, as they're moving positive. I put out a article here earlier talking about the Dow Jones. This is my set order. So I set my order on Apple at $212.45, and it had actually hit $212.32, but I must have like missed it by just a hair or something. And of course, it had gone back over 217. So where was my article? We were talking about. Oh, here it is. Okay, so next earnings season is about to begin, and it's going to be an important one. The main focus going into earnings here towards the end of the year is all the companies that are going to be reporting. They have to report that their revenue is rising. They need to have revenue, rising enough that it's going to be able to support their tightening debt and margins. Rates are getting higher. Debt is more expensive. If you have any sort of long-term debt, that's going to be hurting you over the long term, especially if your liabilities are high in comparison to your assets. That's going to be tearing you up. So Dow Jones reported earnings on Thursday. They had a rise of 8% in their revenue, which driven by strong demand and surging premium ticket sales. So while fuel costs are more expensive, oil has been rising throughout the last several months, Dow Jones was still able to pump up their revenue by 8%. That drove them up today 3.3%. So we're going to see how Friday turns out, but I believe it's going to be going good. We already see stock futures here in the positive, so I think early morning we're going to be doing very well, and depending on how financials go, they may be able to help support the market even higher. So that is all I wanted to cover in today's video. S&P 500 down 2.06, Dow Jones 2.13, NASDAQ down 1.25, Russell 2000 down 1.91, and the emerging markets down 0.99. So that is it for this video. I hope you guys did enjoy it. If you guys did like the recap, give it a thumbs up. If there's anything you guys would like to let me know in the comment section below. Go ahead and drop me a comment. I always reply to your guys' comments. And that is it for today. Thank you guys for tuning in. If you have not yet subscribed, hit the bell. Hit the subscribe button, then hit the notification bell if you want to be notified of my future videos. So it's late. I may have had too much caffeine today. So that is it for this video, you guys. Thanks for tuning in. I will see you next time. Have a great day. Bye.